Right, I see Langers is here, so we'll get him up speaking too. While that's going on, I'll do a quick intro. So I'm Matt, Rocketball's Community and Marketing Manager, for those of you who don't know me, and got a little bit of an interesting backstory for this one. Got a special guest, Adam, here, and this meeting came around by chance, actually, in Denver. So one of the days we were making our way to the event, and we were taking Ubers for most of the time, but it turns out a lot of people in one city for one event can put a bit of a strain on that facility. Thankfully, there was a shuttle bus that ETH Denver put on, but as it was public transport, not necessarily running to time. Long story short, the Rocketball team plus Adam ended up sharing an Uber to the event from our hotel. And turns out that despite not knowing each other, what Adam does with Planner DAO, which we'll get into a little bit later, had already kind of interacted a little bit with Rocketpool. So we'll save that to the discussion. But we've also got Jasper up here who will help to co-host, and of course Langers to talk through what I'm pretty sure is the new record for the longest bi-weekly to date. It is quite the read. If you haven't had a look on Medium, it's up there. But do be careful. We're aware of some imposter scam Medium link floating around. I think it was on Reddit. So just make sure you're on the right page as usual. But yeah, I will pass over to Jasper to kick things off. And we'll be hearing from Adam about the world of primarily financial advisors. And despite the topic, of course, as with all of these calls, this is not specific financial advice, but of course we are talking about the topic in general about financial advice and how financial advisors view the world of crypto in general, ETH more specifically, and then of course in a post-Chapala world, even more relevant, ETH staking. Over to you, Jasper.
Thank you for that lovely introduction, and thank you all to the listeners for being here for our bi-weekly. Before we even begin, huge congratulations to the team and the community for a successful Atlas launch. Atlas has unlocked a lot of capital efficiency that we're already seeing it take advantage of. So with that in the back of our minds, let's welcome our guest. He is runs a certification program for digital accountings for people to learn how crypto assets meet financial institutions and regulations. So would you like to very briefly introduce yourself and talk about what you have accomplished, which is quite impressive?
All right, I appreciate it. And of course, let me know if you all can hear me okay, first of
Loud
all.
and clear.
All right. Yeah, I appreciate the chance encounter with the Rocket Pool team, which resulted in me getting a free Uber to the ETH Denver conference. So I appreciate that, guys. But so I was a financial advisor. I'm a certified financial planner for over a decade, about 13 years. Had my own firm, my own registered investment advisor here in the States, in Texas. And I got bit by the crypto bug, went down the rabbit hole, whatever you want to say, in 2017-ish, something like that. But wasn't sure what I was going to do with it. I was certainly not going to advise any clients to buy it because I wasn't quite sure what it was at the time. But I went down that rabbit hole.
Honestly, in 2017, it was all hot vapor anyway.
It was all crap. It was,
Yeah.
you know what? It was like at that point, I was actually part of the blockchain, not crypto or whatever club. Like I saw the
Hmm.
appeal of blockchain technologies, and like part of it was I saw what could be, and I don't mean to be like some great prognosticator, right? Like I saw what could be DeFi before there was anything called DeFi. But a big part of that is having been in the financial services world, I knew where all those inefficiencies were. I knew I knew how ridiculous it was to take 30 days to get money out of a retirement plan, even though all someone had to do was literally push a button. I know all those ridiculous parts of the financial system, and I knew the ridiculous parts of so many other systems. I saw where blockchain could be helpful in medical and health information, where it could be helpful in, real estate title and all those things. But none of it had been, actually, it was trying to be built. Everyone was trying to, remember, if you, at the time, if any of you were in it, everyone was trying to build their own chain and launch their own token based on every possible ridiculous use case they could think of.
Right, right.
And so that's kind of when I got bit by it. So fast forward a little bit, I told everyone I could about it, and of course they told me to shut up, and they thought it was ridiculous and told me to just, they got tired of hearing me talk about how cool blockchain was. But I honestly saw the next version of the internet because I was in college for the beginning of the first version of the internet, so that's how old I am. And I saw that this was going to be something I thought bigger because now it was money. Anyway, so 2019, I started actually speaking at some crypto conferences, and I argue that it's only because they wanted someone with official looking letters after their name actually speaking. And then I started doing a YouTube channel just to explain it. I never wanted to, I always told everyone, I don't care if you buy it or not, I just want you to understand it. We started, my partner Ron and I started a course. We decided people were going to invest more and there was going to be more adoption if they had a financial advisor that understood crypto. If a financial advisor could help them with what to buy and when and how to allocate in their portfolio and how to handle custody and all those things. So we started a course. That course turned into a certification called Certified Digital Asset Advisor. So we have a company called Interaxis that teaches that course to financial advisors, financial professionals. And then what we said is, look, a designation is not going to be really valuable and powerful if it's Adam's designation, right? We needed to have some third-party entity managing a designation. So we started a DAO called Planner DAO, as in financial planner, Planner DAO. And Planner DAO manages the Certified Digital Asset Advisor designation. And so that's kind of where we are today. We have this designation, we have this certification process, and that's what you all were alluding to a moment, and I'll get into that. But we now have, the idea was I didn't want my company to be the only one teaching courses because that makes it, again, not valuable, not viable. So we have education partners in Europe and in Turkey and in the Middle East, and we're working on one in Brazil. In South America, we're working on another one in Southeast Asia and one in South Africa. And these are other people who are teaching courses for professionals towards crypto that they're not my course, they're teaching their own, but once someone takes that course, they're eligible for our certification. And then a little bit about where this Rocket Pool merges in is part of our certification process. Most certification processes, you take a course and you take a test. And we said, we actually have a system in crypto where we can test whether or not someone knows how to use it, and we can do it in seconds. So we developed a certification process that someone has to go through in order to get the CDAA, where they connect a wallet, they go through certain DeFi functions or DeFi project, or I guess DeFi transactions. And one of those transactions is they have to stake ETH, and they stake ETH in Rocket Pool. So obviously we're looking in their wallet to see if they have rETH in there, among cool. other transactions they do. They deposit on Aave, they have to bridge tokens to an L2, they have to buy an NFT, those kinds of things. And then, going further through the process, we use POAPs to make sure that these people took a course that is approved. They pay an annual fee to us, but they pay it using Superfluid, a streaming payment from Superfluid. And then their certification is actually an NFT, and we use Unlock Protocol for that. So we really want to, I don't know if you call it dog fooding, you call it practicing what we preach, whatever you want to call it, but we do it not just because, not just to be a gimmick, but we do it because it actually makes sense. It makes sense in a certification process to actually have people connect a wallet and prove what they can do. A POAP makes sense in that case. An NFT makes sense for a certification. Right. So anyway, that's a really super long... Exactly. That's the whole point, right? Don't trust, verify. Well, we can verify. So why would we not do that?
So this is all perfect context because we're coming into this at a time where in the background we have the U.S. regulatory environment clamping down on major centralized access points to different core DeFi ideas like staking. So we just today, last night, saw the first unleashment or the first release of Kraken and Coinbase's staked ETH back to users from the merge. And it's plausible that a lot of these individuals, be they low net worth to high net worth, are going to be looking and reconsidering where they choose to custody. And they'll be considering looking for financial advisors. And the reality of the matter is, majority of these people, when they go out on their hunt for financial advisors, are not going to end up with individuals that understand the crypto economics. So, can you talk a little bit about what you think about this larger regulatory environment and how it's going to transpire with the shifting of capital?
Oh man. Well, the regulatory environment here in the U.S. is obviously a pain, and that's me trying not to use other four-letter words, but it is definitely a pain. As a matter of fact, gosh, today is Tuesday. So yesterday for Planner DAO, we interviewed SEC Commissioner Hester Peirce, and we talked about this.
Oh,
And
wow. Wow, that's incredible.
and she was saying that, yeah, and I believe the recording is live on LinkedIn if anyone is still on LinkedIn ever. But we, she actually, unfortunately, is actually very pessimistic as to the regulatory regime right now. But that doesn't mean it's not possible. It means that there are just hurdles to get over, and there's headwinds and whatever else you want to call it. Honestly, we're looking into this a lot. There's obviously a lot of gray areas. There's obviously a lot of parts of the regulatory framework that are just completely not clear. What we have kind of ascertained is, look, if you as as an individual, as an investor, want to custody your own assets, you can do that. You can actually ask, technically in the US, an advisor can help you with assets that you custody, and they can charge a fee for
Oh,
that.
interesting.
Yeah, there's nothing for a financial advisor in the US. There's not a whole lot that they can't really do for a fee. If they say, look, I'm gonna help you with your funds. Most advisors in the U.S. charge what's called an AUM fee, assets under management fee. You have $1 million, I'm gonna charge you 1%. I'm gonna make my $10,000 a year off of you out of your assets. That's how most advisors charge. Because they're managing those assets in that way. But an advisor can say, look, I'm just going to charge you $500 a month, and I'm just going to give you advice, and you can hold your assets wherever you want. The problem is most advisors, especially in the U.S., and that's what I know more of, but most advisors in the U.S. and even in the world don't understand crypto and DeFi and custody enough to be able to feel comfortable, making that advice. They're getting to the point where they understand. Some of them are getting to the point where they understand what ETH is and what staked ETH, how to stake ETH, and that's a way to earn income. And I apologize to all of you. I'm doing my best to get the word out.
We appreciate it.
But it's slow going, again, because of the regulatory problems, and the fact that, especially in the U.S., where a good chunk of the money is in the world, they're just not making it easy for us. And honestly, financial advisors here have so many other investments to choose from. Like, why are they going to choose one where, from a regulatory and compliance perspective, it's unclear, and they're worried that one day, the chair of the SEC decides ETH is a security, or one day they decide offering stake to ETH is a security product or something. It's difficult, and for advisors, they go, why am I going to do that? I got 1,000 arrows in my quiver. Why am I going to go through that one? But
That's right.
there are those few that have said, look, either most of them obviously skew younger. That stereotype is pretty accurate. A lot of them are looking for clients who are a little bit younger and willing to do this, because the younger investors, they want crypto because they see all the other traditional assets and they go, look, I'm not going to be able to grow my wealth that way anymore. I don't see that happening.
I have a question for you on this topic. there is a common refrain around Ethereum staking as the internet's bond. And on this topic of regulatory headwinds towards access, like Ethereum staking is becoming difficult to access through centralized exchanges now. There's hallmarks of how the treasury system works. If you were a high net worth individual, you can take your money and then go access money market funds or direct treasury deposits to earn approximately 4 to 5% yield on your deposits. In a very similar way, almost, Ethereum staking offers this ability to earn 5, 6% with very little overhead, without all of that regulatory framework. But you get the same core idea. So, what do you think about that idea of staking as a bond?
Look, I like the comparison. Of course, if we say staking as a bond and the regulators hear that, they're going to go, see, we told you it was a security. So we try not to use that terminology.
Right. Just metaphorical sense.
Yeah, but yeah, the metaphor is there. That's how we explain it. Look, I like it. I like anything like that. When we can take something in kind of in the traditional world and use that to explain it to someone in crypto. Now we know that there are other risks involved. So it's not like earning 4.5% on treasuries is the same as earning 4.5% on ETH, because you're earning 4.5% in ETH, and there's always that risk that the value of ETH goes down. Whereas we can talk all we want about the value of the dollars you're earning going down, but that's probably a totally different discussion. But yeah, I mean, look, I liken it to that, and what we're seeing, what we're talking to is more of like the kind of high net worth individuals, the ones that are younger, especially the ones that are a little more crypto literate or even crypto native, that see that like ETH, they like the idea of the value of ETH, right? The value of ETH being it's this worldwide computer network that is going to keep that is going to keep, I don't want to say accruing value, but it's going to keep having value. It's going to keep going. And how do you own that? You own part of that computer network by owning ETH. I mean, I know technically you're not owning it, but that's how you participate in the growth of that network, the continued growth. And if you're going to own ETH because you think it's going to go up, well, why wouldn't you stake it? One, because you want to earn the interest, and two, because you're interested in keeping the safety and security of the network, right? You want it to move forward. And kind of the way I discuss it with people, and not just around staking, but just the value of ETH. Like, why do I think the value of ETH is where it is, and why do I think it might go up? And kind of the narrative I use is not always in like DeFi, but it's more like I look at news, or I look at reports that come out like a few weeks ago. I think Citigroup came out with a report that said they expect $4 trillion in tokenized assets by 2030. And BlackRock keeps talking about tokenized assets and tokenized securities. Well, where do you think those are going to go? A good majority of them likely are going to be on Ethereum. Therefore, there's going to be more transactions, trillions of dollars of more transactions on Ethereum, and you have to have ETH tokens to make that work. And we know with every block, there's fewer ETH tokens in the world. So, I mean, the math is kind of simple. So even if you don't care, like even if you're not into DeFi as it is, you have to see where there's value in ETH tokens, because the network is going to continue to be utilized. That makes sense. And then if you want to participate in that and earn some interest on it, then you buy it. Like, to me, it's not a whole lot different. I mean, the analogy I give a lot to for blockchains, L1 blockchains and their native tokens. So Bitcoin and the Bitcoin token and Ethereum and ETH is, I mean, if we go back to, this is an odd example, if we go back to 1776 when the U.S. was starting, when the U.S. declared their independence, the U.S. was essentially an L1 network at the time, right? Like, they were a startup L1 network, essentially.
Nation states as blockchains. I love the metaphor.
Exactly, and they created their own currency, right? Their own cryptocurrency called the dollar. And no one thought the dollar had any value. Like, the dollar's value is going to be based on what this network called the United States could do in terms of value. Well, it took a really long time, but it ended up being pretty valuable, right? The dollar is pretty valuable compared to everyone else's currency in the world, if you go back to 1776. So that's kind of what ETH is. If you think that this what's being built on ETH is going to be valuable. This is how you buy into it. This is the equivalent of buying the dollar in like 1800 and just holding on to it for a while. And holding on to whatever you could buy. This is the same thing, and then you go, okay, well, now I'm also going to earn interest on it. All the better, right? Like all the better. So that's kind of the analogies I give, and I try to help financial advisors understand that. But I'm not going to lie to you guys. It's not. It hasn't been an easy road. It was an easy road in mid 2021. It was easy, man. I had so many people taking my course, I didn't know what to do.
Right.
But now, like it's, between, last year, Terra and Celsius and Voyager and then FTX, like between all that and now regulatory headaches, it gets a little harder in the US. I feel like elsewhere in the world, it's picking up a little bit more.
I have to echo the same sentiments. We're seeing adoption pick up elsewhere as innovation gets hampered by this overhead because people don't want to have to face the SEC. I'm curious, as you sort of introduce DeFi to your people who come to you for advice, what metaphors do you generally try to bring to the table to understand it? Because DeFi, a lot of times, is concepts that don't quite click to people right away, especially for people who haven't self-custodied ever before. So how do we bridge the gap for people who are very used to this old legacy financial system?
Well, look, when I'm explaining it to financial people, and we talk about custody, and that's one of the hallmarks, right? So, well, first, what I have to do, like, especially if I'm getting people that are relatively skeptical, but look, I'm talking to people, financial advisors that, as you said, are kind of rooted in the traditional system. This is how we do things. I let others custody my assets, and I let others custody my assets because I have to have trust in them. And so I first have to start with a lot of head nodding, and a lot of head nodding means we go back to why Bitcoin was created. And we go back to the financial crisis. We go back to the idea that if I want to send you money, I have to ask a bank's permission to send you my money. And I have to do it on their timetable, whenever they want to do it. And because of that, that's why we had a financial crisis in '08, because the bank then took my money and your money and everyone else's money and did risky things with it. And everyone starts nodding their head. They're like, yeah, I remember that. Man, that was crappy. That, they got bailed out and we got nothing. Except, inflation. And so you get some head nodding in there and go, okay, now I kind of see a little bit of where this is going. Because otherwise, everyone, especially skeptics, read in the media about how this is all scams and crime and everything else. And they don't understand where it comes from. And the idea where it comes from is, I need to be able to send you something of value without asking anyone's permission to do it. Okay, we can do that. Now, in order for me to send you something of value without asking anyone's permission, I have to have a way to own that asset that's not a bank owning it. And again, when I'm talking to financial advisors, they do know about the idea of self-custody because originally everything we had was self-custody. Most of the assets we had, like I used to own a share of General Electric stock by virtue of the fact that I physically had the stock certificate, right? Like that was ownership. And if I sold it to you, you give me cash and I give you the stock certificate and now you own that share of General Electric stock, right? That was it. Like that was custody. And the reason why we had to switch to the system we have is so people could actually trade them more efficiently. And the reason why we had to switch to the system we have is so General Electric would know who owns it, so that they know who to send a dividend to and they know who can vote. And so, and because stock certificates are not safe sitting in my filing cabinet, those kinds of things. So we developed this system to be more efficient. Well, now we've evolved technology to the point where we don't need that system anymore to be efficient. We can be perfectly efficient without it. So why wouldn't we?
In fact, there are inefficiencies in the old one with naked short selling and all that. Well, continue. Sorry.
No, you're right. It became inefficient because the technology available went past where the financial system was. right? That's
Right,
exactly
right.
why we saw the short selling. That's exactly why we saw GameStop and AMC and everything, because the technology, and that's why we saw the problem with Silicon Valley Bank a few weeks ago or months ago. It's because the technology has surpassed where the banking and financial system is, but crypto is where that technology has gone. And so that's, a little bit of what I explain is in order for me to send you something of value without having to ask anyone's permission, you have to know full well that I own it and you before I'm able to transfer it to you, and everyone has to know that. And then once I transfer it to you, we all have to agree that I transferred it to you, and now you have to own it, and everyone has to agree on it. And that's the only way you can do it. That's it. Otherwise, you're having to ask someone else's permission. And if you have
Hmm.
to ask someone else's permission, they get all the power,
Right.
right? I mean,
So,
that's kind of how it works. But again, a lot of financial advisors get it because they understand the idea of self-custody through, actually owning stocks or actually owning, being a part of some private investment where I own a piece of that private real estate investment by virtue of the fact that I have a monster stack of papers in my office that I signed that say I'm the owner,
in some ways,
right?
it's a hallmark to older days.
It is, and it's because we like the idea of owning things, but then we got lazy, and we got lazy, because we wanted to be efficient. And look, there was a reason for banks, and there's a reason for centralized custodians and exchanges for years, and it's because of we needed it for technology perspective, and we needed it because we didn't necessarily trust each other, so we have to outsource our trust to someone, and the banks took on that role of we
Right.
outsource our trust to them. And look, for years we outsourced our trust to the government to keep the value of the dollar or to keep the value of whatever fiat currency you have. And when that trust gets eroded, as trust always does in some sort of centralized system, then you naturally come up with some sort of remedy for that. And we've naturally come up with some sort of remedy for that. And if anyone, and look, most of the people that I'm teaching this to, they're not naysayers, they're not negative on it, because they're not going to spend $1,000 on taking a course just to argue with me. I mean, look, if they want to spend $1,000 to take my course and argue with me, so be it. I don't care. But I'm still taking their
Right.
$1,000. They can argue all they want. But the ones that are in there because they have an inkling that this is going to work. And look, we can talk about the technology of self-custody. We can talk about why it exists. We can talk, if nothing else, I tell advisors, look, whether you're 100% for crypto or you just kind of think like you have clients that are into it and you're not quite sure, digging your heels, like the people who dig their heels in and say no, I don't argue with them a whole lot anymore because I'm probably not going to change their minds, just like they're not going to change mine. But also, I go, look, one, the irony that you're usually arguing with me on Twitter or LinkedIn, something that didn't exist 20 years ago, is ridiculous because you're actually using Web 2 to argue with me that Web 3 is not going to work. That's the equivalent of like someone arguing it via newspaper articles that Twitter's not going to work.
Right.
Before that, like technology is going to evolve. It always does. It always has. It never stops. And that's why I'm 100% certain this will work. Well, I say I'm 99.96% sure because we could like get hit by an asteroid or something. Like something could happen and we don't make it there. But
I think
technology
our
always
listeners,
evolves 100% of the time.
yeah, I think our listeners will largely agree with you, and a good number of them are node operators and have a considerable amount of wealth locked into these devices for a large period of time. So I'm curious if you have as a final question, any general advice for people who have large amounts of value staked in the crypto environment?
So that's a really good question. It's funny. I was if there's a large amount staked, one is I do talk to people who have a significant amount of crypto, and you decide what significant amount is, but a significant amount of crypto. And what you have to understand is one, it's still wealth. Like whether it's crypto wealth or whether it's dollars or whether it's real estate or whatever, it's wealth. You are now wealthy. Congratulations. There is still some planning you should do around that. And some of that planning is old relatively boring kind of estate legal planning. And some of that means talking to someone like an estate planner or whatever. And if you're interested, you could DM me and I'll get you the names of some people that can help with that stuff. And some of it is thinking about how you're going to use this wealth. And I know, like, it's not necessarily, like, I'm not talking about just being a node operator at this point. I'm talking about the fact that you have significant wealth, you're using that to build even more wealth, you're probably going to compound that and everything. But my friend Matt, who's an estate planner, says you can be 100% self-sovereign until you're not. And what he means is you die, you become disabled, something like that, you lose your keys, whatever. All of a sudden now the government gets to kind of take everything, right? Like other people now get to decide what happens to your assets because there's still rules, there's still laws, right? Like if you're a node operator and you control everything and you don't tell anyone else how it works, or you don't tell your family or whomever else, something happens to you, what happens to all that wealth? If it dies with you because you held all the seed phrases, then that's it might not be a problem. Like you might not care that much, but maybe you go, look, maybe I'm getting to an age or family situation or whatever where maybe I need to plan for some of this. Honestly, maybe some of my assets need to be moved to some sort of, I know it sounds weird, but some sort of other geographical jurisdiction. Sometimes it needs to be moved to some other custodial solution. As much as you all don't want to hear about, like not having full custody of your assets, sometimes you have to give that up to get certain tax benefits or to get certain protections, right? I mean, what we're seeing also is the people that are in crypto. I know it hasn't been around that long and staking hasn't been around that long, but a lot of the OGs that have a good amount of wealth, maybe you're getting to that point where you're like, I'm getting married and I'm having kids and I want to buy real estate, like I want to buy property. I want to actually do something with the money I have. Well, how do I do it in a way that I'm protected, my family's protected, my wealth is protected? Like you don't want to be the guy who loses it all because you didn't want to plan for it. It's not a whole lot different than someone who woke up one day and had, $50 million worth of Facebook stock because they started working there as a janitor way back in the day. So all of a sudden you have wealth. There are systems, there's laws, there's trust, there's structures you can put in place. And there are honestly custodial platforms you can use to manage the assets in that trust that, yes, are not full-on self-custody like you want where you control every bit of it, but there are jurisdictions like Switzerland and Liechtenstein that still have custodial banks where they don't mingle assets with other assets. It's not like in the US. They don't rehypothecate. They don't lend out your assets. If you put $1 million in, that's your million. No one else gets to touch it. And there are structures you can put in place. But those certain places in the world have established that. So what I'm saying is if you have a decent amount of wealth because you're a node operator and you're doing well, that this is the time, especially when from a relative perspective, the price of ETH is down. This is when you start doing things like gifts to trust or gifts to family or whatever. Because if you think the price is going to go from wherever it is today, I don't know, close to hovering around 1900 to 10,000, and you have a significant amount of ETH, you want some of that wealth to grow outside of your estate. And again, most of us live by the like not your keys, not your crypto mantra. But when you get to the point where you go, all right, are there structures that I can put it in, and are there custodians and geographical jurisdictions that I can put my assets in where I can still have some control over it a little bit? My family can get it. I can decide that my family is going to be taken care of for generations, or I can decide I'm going to invest it for the betterment of the Ethereum community, the crypto community, or some other some other foundations or some other charities or some other causes that I want. Or I just want to buy a piece of property and I don't want everyone to know that it's me. Those kinds of things that where you're still protecting your assets, there are ways to structure that such that you can still earn, you can still stake, you can still operate nodes. I'm working with this state attorney on some of those. So honestly, like I might have to call on some of you for some of the technical help, to be honest, to make sure it works.
Feel free to.
Yeah, like we were talking about it the other day. but there's still that planning that needs to go in there that says, okay, if most of my assets are in ETH, if most of my wealth is in ETH, and I'm staking, I'm earning a certain rate, I'm earning a certain, we can call it interest rate, but a certain growth rate every year. What am I going to do with that money? Am I just going to keep staking in, ad infinitum? Like, am I going to do something else with that money at some point? What's the plan? Is there a time when I get out? Do I borrow against it at some point to buy a house or buy a second home or get married or whatever I want to do? You start going, all right, now I've accumulated some wealth. And, I forget who said it, but it might have been Warren Buffett of all people, but whoever said it goes, you only have to get rich once. The rest of your job is keeping it. So
which
if
can be
you're,
a real challenge.
it is a real, especially in crypto. Like we know there are different risks, there are different attack vectors, there are different
Yeah.
ways that people can get it, and it can be gone in an instant, and there's not a whole lot of legal recourse. So
Yeah,
you have to do the,
we like to call this place the Wild West and take all reckless abandon, but risk management is crucial, especially at this point where it's a trillion-dollar asset.
exactly. And if you have, again, for a lot of people, I talked to someone today who never thought he'd be in the situation of being worth what he's worth. And was, you kind of go, all right, I'm an adult now. Like I have to do adult things. And whereas some of it does fit into the realm of like old stodgy kind of planning, it's there. Sometimes it's there for a reason. Like sometimes the old stodgy is
Right.
there because there were really wealthy people who made a lot of money doing something, whatever they totally believed in. Remember, there was a point where like the crypto of the day was railroads, and the crypto of the day
Right.
was steel, and the crypto of the day was banking one day. Like that was
Crypto
an
may
odd
be,
thing to, yeah.
yeah, crypto
And
might be new, but getting rich is not new.
exactly. And there are other people who have made their money and made their career helping those who have wealth keep their wealth,
Right.
or helping those who have wealth live the life they want to live because they've taken those risks and acquired that wealth. And the
Right.
thing is, people, it was the tech people from like 2002 till recently, and now it's the crypto people that are they're again stereotypically mostly young and getting to that stage where you're like, oh my gosh, I have a lot of assets, I have a lot of wealth. I need to make sure I don't lose this. And obviously, there are again those risk vectors of wallet hacks and everything else. But then there's also jurisdictional considerations. There's tax considerations. There's liability. Like you don't want to, you run your car into somebody, and all of a sudden, you have crypto assets. Well, we can remember this is the most traceable asset ever created. Like if
Hmm.
if if someone sues you, they're going to find your nodes. I promise.
That's true.
And if they come to me, I'm going to help them.
As you should. I mean, it would be the normal course of action.
Yeah, and
But
again, like if
yeah,
anyone is interested in that and wants to do it, what, like send me a DM or something, and I can, like, I want to make sure people like you get to the right person that can help because like I've talked to a few people that are like, oh, I was hanging out on this Reddit or something, and it's other people talking about where they can go get advice because they have, a significant amount of wealth, whether it's a million, 5 million, 10 million, 25 million, whatever it is. And I'm going, okay, you need someone to help coordinate all of it because otherwise you're going to have a whole bunch of, and we see this in traditional finance too. You end up with what's called the junk drawer of financial products, right? Where you like you did one thing one year because someone told you for tax purposes because you just paid your taxes. And you're like, damn it, I don't want to pay taxes anymore. And then someone else said, oh well, you need to move your assets outside of your estate so you can leave it to your kids, and you go do that, and then nothing makes sense. Or you've moved all your assets
hmm
into some sort of trust for tax purposes, and all of a sudden, lo and behold, you can't use it anymore. You're like, wait a minute, I want to buy a house, but I can't because everything's in different trusts. Well, I mean, this is definitely, whereas it's some old stodgy estate planning, this is still a new technology, and we still have to make sure that the self-custody that we talked about earlier, the new technology of it, fits within the old stodgy estate planning.
and that is definitely your expertise. I want to thank you again, Adam Bloomberg, for joining us for an incredible Twitter space. If you want
Oh,
to learn more, you can check him out on Twitter at InteraccessAid, which is named after the company founded, which does his certification. We'll be shortly moving into the second part of our call where we have Langers join us as we discuss the biweekly. But thank you again, Adam, and any parting thoughts?
I don't think I have any parting thoughts. I appreciate what you all are doing, and like I said, I'll probably be calling you all for some technical help on some structures we're putting together, and everyone feel free, please, to hit me up if you have any questions.
Awesome. Thank you.
Thank you.
Maybe we'll have to get you on to one of our chit chats, Adam, we have in the Discord, usually every Friday Australian time. I think there's probably a few more things that we could have a bit of a chat about on this topic, and there's an
You know
opportunity
what?
for people
I
to.
was going to join. I joined the Discord a few weeks ago, and then there was Chapella, and then you all had your
Yeah,
new release, and I was like, you know what? I'm not going to bother them for a while. Like, I'm going to let them get that stuff done, and after we do these spaces, then I'll jump in there and start chatting with people. But I'm going to let you do your thing, and you got through it beautifully. So now we can move on. Now we can protect all that money we're making.
sounds like
That's
a plan.
right.
All right. Thanks, guys.
Okay,
All right.
so Langers, you're still there?
I am. Hello. Thank you, Adam. Thank you for that. It's going to be interesting to see how those conversations kind of progress over time. I think it's definitely a maturing of the market as which is great to see.
Right. Yeah. I mean, financial planning is clearly a sign that things have come to a point where we're here for the long run, right? And speaking of the long run, Rocket Pool has positioned itself incredibly for the long run with the release of the Atlas upgrade this past fortnight. So, congratulations. How does it feel?
Amazing. Yeah. Obviously, it was at first. I think it was certainly relief to kind of have everything out and not have anything major broken. So certainly there's a big relief, a big sigh, kind of amongst the team. So then it's really just kind of watching how it's performing, and then making sure everything's kind of cool and fine. So yeah, no, it's been very, very good. I would say it's been successful. I think the numbers probably say that. So that's
Yeah, we'll get
that's
into
amazing.
those in a second.
Yeah.
So let's jump into those numbers a little. So the rETH supply hit a pretty crazy milestone. 250,000 rETH have now been minted in this past fortnight. Additionally, mini pool count saw tremendous growth, increasing 26% in just one fortnight to hit 17,500. For some perspective, I believe before Atlas went live, mini pool count was at 14,000. So approximately 3,500 mini pools, several tens of thousands of ETH have flown in, which is just incredible. So, what do those numbers mean to you?
I mean, it kind of Atlas was designed obviously for withdrawals and scalability. Withdrawals, I mean, we've seen I think maybe we've seen like 40, maybe 50 mini pools kind of exiting. Obviously a substantial. Then on net, we're definitely up. So we've seen the kind of that happening. We've seen partial withdrawals going through. We've seen people being able to access those rewards, which has been fantastic. I think that's definitely rewarding. Seeing the whole kind of closed loop of Ethereum staking kind of happening within Rocket Pool, and that's very, very that feels very, very good. In terms of the, go on.
I was going to say, in terms of closed loop, it's pretty fitting in that the rETH peg has returned right to its peg and sort of its acknowledgement of the closing of this loop.
Yeah, and that's going to help things considerably. I think being at a premium, it didn't necessarily kind of stop it. I think that it kind of, but being at peg is definitely going to make things a lot easier from an RA perspective. Yeah, and then obviously from a scalability perspective, the idea behind Atlas was to have more capacity to mint rETH, and we certainly have that now. We have that in absolute space. So there's so much capacity to mint rETH that it's amazing. So that's great. So now we're starting to get that kind of like demand coming in now on the rETH side, and obviously we'll continue on and make from like a promotional kind of side and from a making sure that everyone's kind of and from the IMC perspective as well. Mm-hmm. So there's a few things kind of on driving that as well, but we'll see that kind of coming in pretty soon. I think last time we were in this situation, it's always hard because like you're never going to strike the perfect balance between supply and demand. And so now we've got this massive amount of supply, which is fantastic. Although I think last time we were in this position, we were like 2 or 3 WoW deposits from being full again. This time around is a bit different because we've now got a lot more capacity, but still, there's a lot of rETH demand out there. So hopefully that kind of starts to that is kind of like starting to filter in now, which is great.
There's a term I like to use, or I recently started to come to use, called Goldilocks zone, and that refers to a state where the deposit pool is empty essentially, but the premium on the open market is 0 and there's no discount. So Rocket Pool historically has had very little periods of time where rETH has traded near peg. It's either been large premium, large discount, and that's essentially it. So for the very first time, we might see a consistent period of time where our rETH trades on peg, which is exciting. For a variety of reasons we'll get into it later. But just to wrap up this numbers portion of the call, I want to shout out Dr. Worm for their lovely Dune board, which I'm just going to read out some crazy numbers from real quick. Since the launch of Atlas, we have had approximately 3,600 new LEB8 mini pools spun up. 2,600 of those were from bond reductions. There have been approximately 90 solo staker migrations. And there is currently approximately a 63K ETH with deposit queue. So just astonishing massive growth. And I wanted to ask you what your thoughts are on the queue. Just today, we've seen approximately 10,000 ETH of deposits as Coinbase and Kraken begin to release ETH back to users. It seems like we are in a very good position to capitalize on these flows.
Yeah, I don't think we could have timed it more perfectly if we'd have tried. So I think with Kraken kind of unlocking, it's absolutely perfect. I think hopefully we'll see some strong inflows from those staking or that staking provider into Rocket Pool. Obviously, the other big one for us is Lido. When Lido kind of open up, and so that will be a big thing for us as well, because I think there's going to be a lot of people who are in Lido at the moment, but they want to kind of either distribute their risk or change providers completely, and so we'll be looking to kind of capitalize on that as well, to take some of their kind of share, which, to be fair, is probably good for them in a way.
Right.
So yeah, so that'll be good. They're kind of like two things, but no, timing wise, it's perfect. And we'll get some. We've already seen, as you said, some strong inflows. There was like a 2,000 one over the weekend, a couple of few hundred ones coming in as well. So that'll be very, very interesting to see what happens over the next couple of days, in particular.
Fully agreed. And the fact of the matter is, with the queue the size it is, it doesn't really matter who wants to deposit or how much they want to deposit. We'll probably be able to accommodate them, which is great. No longer are we going to be in the days where people have this horrible UX of having to say either pool is full or having to pay a premium. We can finally give them a proper experience.
Yeah, so that was part of the Atlas release as well. Was kind of like this dynamic deposit limit. So essentially, so the deposit pool still has this kind of 18,000 ETH limit on it, but it essentially what happens is if there are mini pools in the queue, then it's dynamic. So you can actually deposit above 18,000, beyond that limit, to take up the capacity of the queue. So I think it includes. So I think what is it? 65,000 actually in the queue, and then there's 18 in the deposit pool itself. So yeah, we can take absolutely massive deposits now.
Right, right. We could crazy amounts, and it's good to see that we're able to compete on the same level as the toppest tier institutions in terms of inflow now. So moving on now to the smart node, version 1.9.2 was released, including a high priority update for Lighthouse and Prism users. And we also released 1.9.3, which is just a recommended update, but includes many client updates, including some high priority ones. There was also a bug that Dipsy managed to find, and I believe the update or the solution for that is included in 1.9.3. Could you give us a quick TLDR about what happened there with the Dipsy finding?
Okay, now I have to remember.
I believe it was with
It's
the
around
distribution.
that. Yes, in Europe, but in the fee distributor. So I think it was along the lines of it wasn't calculating um, the it was, yeah, that's right. So it essentially, if you do a bond, I think it was if you do a bond reduction after without distributing your fee distributor, the amount gets calculated slightly wrong. So, well, it gets calculated wrong. So now there is a workaround in that smart node release, which essentially distributes your fee distributor, so that you don't have that problem before you do the bond reduction. So that is a workaround at the moment, and Kane's worked on a smart contract fix for that. We're kind of we're seeing how things go. We will release well, at some point we will release a smart contract fix for that, but whether it is whether it is in the next kind of week or whether it'll be in the next few weeks, we're not quite sure yet. We just I think what we're going to do is wait and see, just make sure that there's no other kind of things that come up. Not that we're expecting any, but we're going to wait and kind of see if there's anything else, because we don't want to keep doing releases if there's going to be more than one. Plus, also we need to get audited and all that sort of stuff as well. So, there's a little bit of kind of logistics around that. So, and as we've got this kind of workaround in place, there's no strong driver to do that, but we will kind of fix that going forward.
Right, and if I remember correctly, the amount of capital that was actually at risk was quite small, and it was a very limited set of users who it would affect. So, all in all, a pretty contained situation. And Joe commented once in Discord about how the time from reporting to actual announcement of a solution was very fast. So just kudos to the team on the communication around that small issue.
Yeah, we kind of, well, I mean, obviously we're paying very close attention to everything. At the moment, we're in kind of a bit of a hypercare situation to make sure that everything everything's running smoothly. But yeah, no, it was a great kind of response from the team. The team are doing a great job.
Sweet. So moving on now to research and development. So as we all know, Atlas launched and withdrawals are live, and as the Bitcoin maxis predicted, everyone withdrew their ETH, and everything's going to zero. JK. ETH stake around the board is up massively, and Rocket Pool continues to attract a punch above its belt, honestly, and attract greater than 2% market share that it currently has in terms of inflows. The smart contracts were verified and merged, meaning the bug bounty is now fully available. It has been for a couple of weeks now, since before Atlas was alive. Is that correct?
That's right. Yeah, yeah. So yeah, I think like a week before or a few days before.
Meanwhile, I believe the price feeds have continued to be developed in the background. And can you give us an update on how the ZK Sync era price feed is going? The ZK Sync era being the ZK EVM, a new version.
So I believe it is actually in 1.9.3. So it should be updating now. I think we're probably just keeping an eye on it to make sure that it gets updated on a consistent basis. But I believe it was in 1.9.3. So I think that's actually live now. And so we can start kind of obviously reaching out to partners such as Balancer and that sort of thing about that.
Right. ZK Sync has already attracted over 100 million in TVL, so they've been growing quite rapidly. It would be exciting to see what we manage to whip up over there. I believe once the ODAO will update to 1.9.3, we should be able to start seeing that feed. Is that right, or is there more to it than that?
No, I don't think it even requires consensus. It's
okay. Nice.
If like one or two of them upgrade, which I think most of them are upgraded now. So it does, but it doesn't even need consensus.
Yeah. So, is there any approximate timeline you could give us on the website? This has obviously been in production now for a little while in the background.
Yeah, so we're having a bit of some sessions this week around it. It's kind of been something that's been trickling because of everything else that's been going on. But we're now that I say it's been trickling from my perspective. I haven't been able to give it much love. But Nick has been working on it, really strongly in the background, and so we're going to be working on that quite intensely this week to get it to a point where we can start showing people and that sort of thing.
Awesome! Excited to see how that goes. In the integrations world, it's been incredibly busy. It seems like it's been an exponential growth since the launch of the Chainlink Oracle. So first off, we have a proposal that I co-authored with, I forgot his name, from Llama. It was Matthew Graham, who is affiliated with Aave through Token Logic, his firm, and does really good work writing these proposals. We collaborated to propose that Sturdy Finance onboard rETH balancer pool for leveraged farming. This is a really interesting proposal, as Sturdy Finance currently only supports the rETH version, and they are able to attract really absurd yields, as the delta between ETH borrow rate and the value in these incentivized pools is quite large, and the liquidity is quite high. And so with a little bit of leverage, people pull in astonishing yields. So now that the Chainlink Oracle is live and rETH has substantial liquidity, these more nuanced leverage strategies are starting to see rETH and adapt it. So very much so looking forward to seeing this progress. I've talked with the devs of Sturdy, and they were quite excited to see this move forward. Speaking of hyper staking, Alchemist had long ago onboarded rETH. However, prior to the Redstone upgrade, it was unable to be used due to the DPEG scenario. However, just recently, they have increased their cap for borrowing up to 1,000 WETH. So rETH in the Alchemist system allows you to do a permanent loan. So you would lock up that rETH for the duration of the loan, until you either repay it with the interest. Actually, no, I believe it is a permanent loan. In return, you get their wrapped ETH asset, which you can then use to stake more rETH, which is again a form of hyperstaking. What is cool is Alchemist is fairly long existing on the chain, and so has Lindy effects, and therefore is less likely to have smart contract bugs than something like Sturdy, which is relatively new. However, bugs can happen across all these protocols. So my question to you, Darren, is as these new boutique leverage strategies start to integrate rETH, do you think that we as a community have to start paying closer attention to make sure that there isn't an excessive amount building up?
Yeah, I think, and this is maybe this is a grant or something that one of the existing community members is kind of onto already, but it would be good to have some of that in a Dune dashboard, just so that it's not like we can do that much about it, in the sense that because we're a permissionless protocol, all of these protocols will integrate with Rocketpool, and that's a good thing. But as a community, I think we do need to be aware of the kind of leverage that's building up. To be honest, most of the responsibility should be on these lending platforms. They should have kind of risk management processes in place, whether it's built into the protocol. Well, it should be ideally built into the protocol. And so, to be able to deal with that. But leverage is something that can cause some issues, particularly when the markets take a downturn. So if you get a lot of liquidations, then we've seen that before, obviously with the 3 hours and capital stuff. So it's something that I think the community should be aware of, and maybe that's where we can start making noise or feedback, or to kind of de-risk that. Although it is very, very difficult because, as you said, we're a permissionless protocol.
Right. Yeah, I think ultimately it should be incumbent on these protocols, but there's always going to be these super degenerate protocols that get spun up to maximize yield without caring about long-term consequence that tend to break things. And even when they get spun up, we in the community and on the IMC can't really stop them. I mean, rETH is a permissionless protocol. The best we can do is keep tabs on the situation and spread the word if things get bad. Saying that, currently the amount of leveraged. Oh, sorry, Mav, did you want to say something?
Are you finished? And then I'll add a little bit on the end.
Say again?
You can finish, and then I'll add a little bit on the end once you're done.
Got it. Okay. Yeah. Yeah, the leverage that's getting built up is currently quite small. So it'd be proactive to get tabs on it now, so we know when things get out of control. But yeah, I believe there is a bounty or grant up for it.
Also important context that the biweekly is largely backwards looking, and we've had quite a significant increase in terms of protocols reaching out, talking about integrations. It's still, I guess, relatively early days for the liquid staking world, at least for Rocket Pool, and we are in, well, it depends who you listen to, I guess, but a bear market. So I'm just imagining what it could be like at peak hype when it comes to the interest for Rocket Pool and rETH, because as at now, I think I had like 3 or 4 calls between today's and the previous stand-up. There's a lot of interest out there.
I can definitely see that. There was a tweet recently, I don't remember who, but it essentially said all of DeFi is just extrapolated leverage staking, all the useful parts, which I still think about.
I think that was Lido's new hire. I definitely saw the tweet. I know what you mean.
Yeah, I think so. Anyways, getting back to the new integrations, dApp node has made substantial progress towards onboarding Rocket Pool to their ecosystem, and they have now successfully launched a mini pool on testnet. So that's going to be exciting to see, as dApp node is a very good way to access the node operating market if you haven't yet, or if you are completely new.
We definitely need more node operators right now.
Yeah. And speaking of leverage, there was one more hyperstaking one here, and that is rETH Aave v3 on Arbitrum. And so this is going to be awesome in that this is the first leveraging platform, I believe, that we have on layer 2. And not only that, this will drive a lot of ecosystem adoption to Arbitrum, which is an area that we don't have as much Rocket Pool influence yet. On Optimism, of course, we have the grant tokens fueling a decent amount of liquidity to establish that ecosystem. But on Arbitrum, it has been relatively quiet. I'm not sure if it is on this bi-weekly, but additionally, Arbitrum is going to soon see the effects of the first bribes take place. So the IMC bribed for the balancer pool on Arbitrum. So that will also be driving a substantial ecosystem in theory. So exciting times on layer 2 for Rocket Pool.
For sure, and that's important. Layer 2 has always been important, and mainly from a kind of an accessibility perspective. You know, a lot of people don't want to pay the kind of gas fees on L1 to get RE, but now they can do that on L2s, and kind of, you know, basically have greater accessibility.
Right. And nowadays, centralized exchanges have direct onboards to layer 2, so you can access Rocket Pool staking and then get out into the fiat world without ever touching the layer 1 hellscape of fees. But there is sometimes good reason to use layer 1, and one of those good reasons is the Aave E-mode. Mark Zeller of Aave is currently on vacation. However, in conversations we had, he indicated that rETH onboarding to E-mode hyperstaking is one of his top priorities upon return. So that'll be very cool to see. E-mode, of course, it enables higher leverage in staking. So while there would normally be a loan to value ratio cap around 70 or 80%, with E-mode, which isolates the market from the rest of the Aave protocol, that cap can be raised, in theory, much, much higher, creating an entirely new world of, an entirely new game theory world that, as a result, drives a lot of pressure into the deposit pool. So that is something to continue to be on the lookout for. Another new partnership that has recently gone live is with PancakeSwap. So PancakeSwap has decided to incentivize RPL ETH and rETH ETH on their protocol. PancakeSwap is kind of interesting in that they decided to fork Uniswap v3 right after the Uniswap license expired. So it is a fairly similar code base and structure to Uniswap. So if you are familiar with how Uniswap works, you can do your exact same strategies on PancakeSwap, but earn some extra cake tokens. Pretty exciting to see another major DEX support Rocket Pool. Interestingly, I believe PancakeSwap is decided to incentivize this pool fully on their own accord. So thank you again to PancakeSwap. It's pretty cool that to see our Rocket Pool and rETH starting to get incentives just on its own suddenly, as protocols decide that they just want people to be on their protocol with that token, likely due to natural demand that's starting to arise.
Yeah, it's certainly a good position to be in from our perspective. But I mean, it is. I mean, they're doing it for not altruistic reasons, obviously.
Right.
Because there is such a huge demand for liquid staking tokens in general, but also in particular rETH, I think. And so, that we're going to be driving trading fees kind of through, but it is very, very good to see protocols acknowledging that having rETH on their platform and incentivizing it is going to be a strong driver for the future.
That's right. And on that note of DEXs seeing the demand opportunity that Rocket Pool's rETH provides, there's a couple more we have that have decided to support Rocket Pool. TimeSwap has launched an rETH RPL pool, which is a fairly new protocol, so I definitely recommend caution when using it. I believe TimeSwap is based around interest rate swaps. So Volt's protocol is also similar to this. However, TimeSwap adds a liquidity component to it, which is pretty interesting. This is some complex DeFi, but I do recommend those who are interested in risk favoring to check it out. The other DEX that has onboarded rETH is Maverick Protocol. And very interestingly, they have taken advantage of the oracle that we have now on ZK Sync Era, since Maverick Protocol is on ZK Sync Era. So you can trade rETH on Maverick Protocol on ZK Sync EVM, ZK EVM, and this protocol is actually pretty impressive. They are an advanced concentrated liquidity provider that allows users to create their own custom liquidity curves and even create unidirectional curves, so you're only providing either buy side or sell side. In English, it's a very fancy AMM on a very cheap network that is planning to become fully decentralized, which is pretty cool. A topic of interest that has started to come up is the IMC has to now, as it moves forward in incentivizations, as these various L2s come to fruition, is to decide where to keep focus. ZK Sync Era has a large history of alignment with Ethereum, whereas there are different chains that may not share that. So Langers, as you and I both serve on the IMC, do you want to give your own perspective about what values you look for as on the IMC for continued incentivization?
Yeah, so I guess a lot of it is supporting L2 ecosystems that are kind of aligned with Ethereum, and so most of those tend to be the rollups. And the rollups are great because they share the security with Ethereum, so they're not a chain by themselves necessarily. They are a chain by themselves, but they're based on the security of Ethereum, and so that's a big thing. But also from a kind of an ideological perspective, I guess, is making sure that these kind of L2s have kind of like a pathway to decentralization, and they kind of share the ethos of Ethereum. Usually, if they are a roll up, they do because they've kind of elected to be a roll up. So those from my perspective, they're the kind of main focus. I mean, I am quite practical as well, and so if there's a kind of like really strong kind of demand from a particular chain, then I'll certainly consider it. But my focus is definitely on those kind of roll ups, those roll up ecosystems.
I also echo largely the same sentiment. I am a little favorable towards the idea of reach. I think there are certain chains that have prioritized reach over decentralization, but I don't excuse that when there is no given or solid or concrete plan towards full decentralization. So I am favorable towards Polygon proof of stake chain, as it has really onboarded such an incredible amount of users, and they have still contributed towards ZK EVM development. But yeah, moving on now, some LEA finance was on our last biweekly, and they are now successfully using rETH in their real yield protocol, real yield ETH vault. It's interesting that they are acknowledging rETH as occasionally having the highest APR of the liquid staking tokens. This is something that is probably going to start happening more often, given that the new Q has some cool quirks, which, as Joe has been monitoring, is soon to breach 100% efficiency, if it hasn't already, although the Q did peak, so it might not have. Do you want to give a quick or TLDR about why the Q might actually be boosting the rETH APR?
So, and it's been a little while since I've kind of gone through this, but essentially, because the queue is more efficient, the way that the queue works now is that it doesn't just use ETH from rETH depositors to, I guess, to match with node operators. It actually uses the node operator ETH as well, and so what actually happens is the node operators kind of lend the ETH to the protocol in a kind of way. It's not in a strict sense, but in a kind of analogous sort of way. And so what that kind of does is it means that we get this kind of, whenever there's a big queue, we get this kind of like boost of yield, because there's more node operator deposits, and they're being used to kind of like essentially, so a node operator who's at the front of the queue gets filled by a node operator who's just come in, and so that actually causes this effect where we get this boost in yield because of the node operator deposits.
Yeah, there's just the amount of rETH stays the same, but the amount of active staking ETH begins increasing. So yeah, we see this.
Exactly.
Yeah, the rETH APR starts to increase, which is we already noticing, which is great to see.
And it's actually a fantastic kind of balancing mechanism as well, because if you think about it, if we've got a huge queue, it means we need more rETH deposits, and so and what the increase in the yield does is then promotes more rETH deposits. So it's actually meticulously designed, I guess. Through kind of happenstance, but it is a very, very good mechanism.
It's a beautiful advancement or evolution of the original Rocket Pool commission design, where there was a floating commission. The problem at that time was it was gameable, right? Node operators had really no time preference, so they could just wait until they can maximize the commission they get back. With this system, with the queue, it's much more obfuscated, and so it's very not granular, and so there's less gameable aspects, and there's much more of a natural to and fro balancing effect. It's really beautiful, really beautiful. Shout out to, if you want to learn more and understand this in detail, check out OX4nax's article on Mirror. You can also find him on Twitter, I believe just at 0x4nax.
Yeah, that's a great article on kind of the process and kind of how it works, because it is something that is non-obvious, and so it's really good. It's really good to understand that, so that it's not like we're creating yield out of thin air. There's actually kind of sense behind it. So definitely check it out.
We managed to find a way to increase rETH APR by not doing any strange shenanigans. It's just more ETH staking going into a limited pool, so the effect is amplified. Moving on, though, a proposal I'm quite excited about has started to make some traction. The Dipsy from the community posted to the Hop forum a request for comment about supporting rETH to be onboarded for bridging on the Hop bridge across Ethereum, Arbitrum, and Optimism. Normally, or currently, rETH can only be bridged to Ethereum through the native bridge, which takes a full week, which is not good UX. And as a result, occasionally there are spreads between the different chains on the rETH price. But now with the onboarding of the hot bridge, users would be able to directly bridge rETH from chain to chain in a matter of minutes. So this will dramatically increase the UX of users, especially as we move towards a layer 2 centric worldview. This proposal has already, I believe, made it to snapshot where it has passed quorum with very overwhelmingly positive feedback. So it seems likely that we will see this go live in the coming weeks or months.
Yeah, that's been going for a while, isn't it? It's great to see it kind of like happening. There's a lot of time in the background. A lot of people, yourself included, who kind of make these things happen, and so it's great to see those things coming to fruition.
Yeah, this is one where there's a lot of moving pieces with a real world bonder involved and having to make sure that the rETH and RPL reward tokens are all available on all the chains. So some legwork involved, but it's definitely important, this one, for making sure that rETH is maximally useful to the community. Thank you again also to Dipsy for his contributions throughout this process. OKX has integrated Rocketpool liquid staking into their DeFi wallet. So MetaMask was previously the one major one we had for wallet staking, but now OKX, who has decided to do it as well. This is a pretty important integration type to get these wallet integrations, as they tend to bring more non-toxic flow. The people who stake with these tend to just be normal retail users who genuinely just want to stake and will at some point in the future decide to unstake, but they don't have any crazy DeFi aspirations or try to arbitrage spreads or anything like that. So they create natural volume and natural usage. Definitely good to see these continuing to flow.
Yeah, I think we've discussed this before as well, in the sense that it's very likely that in the future most deposits will come via these sorts of integrations rather than kind of like through the Rocketpool website. It's kind of it's much more likely that wallet integrations will provide a lot of that. So yeah, it's good, and I think we're going to see more and more of those kind of coming through over the next few months, and it's going to be very exciting.
This is one where it's similar to like how centralized exchanges often see some tokens where one major centralized exchange will release it, and then suddenly a wave of all of them just decide, all right, it's now time. I have a feeling that wallet integrations of this kind will follow a similar trajectory, but that remains to be seen. FlashStake is the last in our integration category today, but they have announced that they are making pretty good progress on their unique spin on rETH hyperstaking. They have been in our Discord asking for feedback along the way. Their main idea is that the hyperstaking, they actually decided to combine two different concepts: the idea of fixed yield and the idea of hyperstaking. When you do fixed yield on normal rETH, you would trade your future yield for an immediate return on your investment. So you have your rETH with projected, say, 5% APR. You could immediately cash out 3% of that in certain protocols, which can be advantageous to certain people. With FlashStake, they're hoping to allow you to do a similar thing, trade future yield for current yield, but have it at a leveraged state, so that with that one rETH with 5% yield, you can now do it for maybe 10 rETH, which would generate you a larger amount of upfront yield. So it's a pretty interesting concept, and I'm very excited to see how that progresses. It's been a pretty crazy week of integrations there, a couple weeks. Yet, governance is probably just as intense. Governance has been filled with topics. We can start off with ODA-related discussion involving health monitoring, and a related topic, which is that the consensus audit report revealed a minor edge case in how voting happens within the ODAO. If you read the consensus, they describe it, it's actually quite simple, but if an ODAO member votes and then leaves, the total group count drops, but that vote is still counted, and so it has an amplified factor. So the community has been at work on both the topics of ODAO health and this edge case, crafting ways to mitigate issues.
Yeah, I finally found some time to kind of jump in there and kind of contribute to the governance stuff. So it's really good. It's really great to kind of have everything moving along, and a big shout out to Val for kind of I guess being the whip in some of those
yeah, absolutely.
But it's very good to kind of see those things moving along and getting the discussion started. I think there's also a thread in now it probably is. I imagine it's under governance around kind of like the rocket pool roadmap going forward.
Yeah.
The team we had something that we had to deal with beginning of this week, but we're starting to do some workshops on that sort of thing to come up with the areas where we think we could probably spend some time, and so we'll start that discussion with the community once we've kind of put together a little bit of so basically some dot points of where we can see things going. Then we can kind of come together with the community to see where we can put some pegs in the sand, some pegs in terms of where we're going to take rocket pool in the future.
It's kind of like the RP team has unloaded a lot of heavy weight in the release of Atlas, and now we're able to look around and see really a huge variety of possibilities. So I encourage people to go check out that thread, as there are a variety of things up for discussion there, including ODAO mitigation, DVT related things, exploration about collaterals. So yeah, the future of RPL is in the hands of the community. Now is the time to make your voice heard.
Yeah, and I think what's important is at this point in the process, everything is on the table. So just let's kind of get every idea out there. Obviously, later on we'll kind of have like the feasibility and the practicality of certain of the ideas, so that we can kind of but we need to be kind of open at first to get all these ideas out on the table, and then once then we can start kind of assessing them based on impact and time. Is there the best timing for things, and then the feasibility and that sort of stuff, so that we can kind of put those into some sort of roadmap.
Right, and clearly Rocket Pool launching the Bitcoin mining pool will be near the top, so excited to see that roll out. Joking aside, there are tons of great things, so figuring out the roadmap is going to be a very interesting discussion within value balancing. So looking forward to that. The IMC has also been having a conversation around the charter and about potentially expanding it to include the Oracle safety around RPL, and further potentially around liquidity. So this is a topic that is been discussed within the IMC, and now we are looking for outside opinions, as we believe the charter currently, as it stands, does not cover RPL liquidity. It is very focused on rETH for good reason. That we wanted to make sure that the original release was very tailored and make sure we accomplished our goal and not much more. And now that we have some experience under our belt, we can look further to expand things if we deem them fit. So the arguments around this are that the RPL Oracle for Uniswap v3 is currently susceptible to certain attacks, and if the IMC created some full range liquidity, those attacks essentially go out the window. This is something that the IMC recently did for rETH, and so that seems like a fairly no-brainer thing to include for the IMC. What is more tenuous, however, is this idea of overall liquidity and where should the IMC be in relation to RPL liquidity. For the time being, I remain opposed to generalized RPL liquidity beyond Oracle safety. However, I do see a variety of compelling arguments in favor of them. However, now would be the proper time to make your voice heard on the matter.
Yeah, I think. I put some stuff in there anyway, but from my perspective, it's important that putting RPL to work in the protocol is kind of like the thing that people do. So
right.
So that's kind of like an important thing to kind of safeguard. But obviously, the Oracle, we've improved the Oracle resiliency through using quite a large TWAP. So that definitely does help. But the kind of much larger sort of attacks, it is a little bit still acceptable, still open to. So that's why we're kind of saying that as well. I think in general, a lot of people can't stake their ETH within the protocol, but my thing is that if they can't do that, then liquidity or lending platforms are kind of the way to do that. And so, yeah, it's a hard one to kind of gauge, but because you kind of have to balance these things out.
Absolutely, and open discussion is usually, hopefully, the best way of finding the proper balance. So check out the governance forum for all of that and more, including a variety of recent reports to make sure all the counting is accurate. We can now move to media marketing. How does that sound? I think we're making good time.
Yeah, sounds good.
Yeah, sweet. So, strong mini pool demand, as we mentioned, has boosted the rETH APR to now displaying on a variety of different front ends as highest APR. So Beacon Chain, they track APRs, have consistently seen rETH at the top of their one-day APR. The MetaMask wallet now also consistently shows rETH at the top there. So it's been crazy to see the response on Twitter as people are now excited to see the decentralized option now also being a rewarding one.
Yeah, it feels like on all fronts we are now there, if you know what I mean.
Yeah.
It's kind of like we can now compete on scale. We can now compete on yield. We're kind of at the point now where people are running out of excuses not to stake with the decentralized option.
It's kind of like how the Bitcoin maxis are running out of things to claim Ethereum's a scam about, right? It was first the pre-mine, then it was the merge never happening, then it was withdrawals never happening, and on. But the list is starting to run dry. It seems like it might be that same way for Rocket Pool and its detractors. The media reception to Atlas on Twitter, in professional outlets and in the community has been fantastic, really. Our good friends at ETHStaker hosted us for a live stream launch party that was co-hosted by Nixo, Superfizz, who I think was sick at the time, but still powered through. So big shout out to them.
Yeah, Fizz had quite a husky, sexy husky voice on the call.
It was rich in flavor.
It was pretty rich.
But shout out to Superfizz for embodying the ethos of never having any downtime. But yeah, so the response has been wonderful. We've had coverage from Binance Research, from CoinDesk, Blockworks. It's it's been covered from the top tier of these media outlets to your local DeFi thread or has started to pick up really in the past couple of weeks, the rETH buzz. Nick, you want to speak speak to that?
Yeah, for sure. The media coverage of Atlas there is really just the tip of the iceberg, right? And the at the length that the bi-weekly is getting to now, we really just can't track and list every single mention of Atlas. It was pretty much everywhere for a time. Some of these things in the marketing list and also in integrations, it's the usual case of not quite believing that it was less than 2 weeks ago because so much has happened. There's been so much talk about Rocket Pool. So there is really that combination, as you guys have just said, not only are we where
We lost
everyone...
Mav, or is that me?
Sorry, I didn't hear either. What was that?
Can you still hear me? Hello?
Yeah. Yep. Can hear you.
Oh,
I don't know what Langers said.
let me just multitask on DM with Langers in case there's a...
Yeah, we might have lost him. He has... Yeah, there's been a track record of Twitter and Twitter Spaces not working out. Fortunately, we've managed a good hour and 10 without anything, but please just stand by for a brief moment as we get on with him. Actually, I will take this brief moment to just give a quick shout out to a sleety.eth for his token motion _IO Twitter account and the content he's been producing for it. Sleety was awarded a grant to produce animated threads that help explain how Rocket Pool functions. We in the know, in the Discord and in the community, understand Rocket Pool, but from an outside perspective, it is quite challenging. There's a lot to it, and so these animations really make it intuitive to understand how it all comes together and how Atlas was a 300% supply multiplier, which was really not intuitive at all. But when you look at it in Sleety's animation, it just clicks and it makes sense. So I have been sending these animations to everyone when I've been explaining Rocket Pool, and I encourage you to do the same, as they help a ton.
Langus is back. How do you hear me now?
I hear you.
Sweet. So yeah,
all right.
Shout out Sleety.
I think the final point of what I was getting at was everyone's talking about us. We are where everyone is looking, pretty much, and there is a pretty compelling case. Whether or not you have decentralization concerns, some people are just chasing the highest yield, and Rocket Pool is pretty competitive when it comes to that. So the stars are aligning.
We have a couple of questions coming in from trading. So I believe Austin is hosting the consensus event. Does Rocket Pool have any plans for that? I don't think so. Just confirmation.
Sorry, what event was that?
Consensus in Austin this week.
No, we don't have anything. We're trying to figure out which events that we're going to be doing, to be honest. Being in halfway around the world, we have to kind of be very targeted on which ones we do. But yeah, so we're kind of working on which ones the next one's going to be.
Yeah, unfortunately, everywhere is pretty expensive, both in terms of travel and time too. But pretty much everyone I've been talking to for the past week or two has either been asking if we're going to be there or trying to coordinate Twitter spaces or calls around being in Texas. So it does sound like it's going to be pretty busy.
Ken is asking about permissionless or dev connect. Any ideas about those? Or still in this sort of unsure overall?
Yeah, it's this still in the unsure. I want to try and do a little bit more on that this week because obviously we need to kind of lock down which ones we're doing. So that we were definitely looking at ETHCC, but I think we've kind of moved past that now. I think now that Dev Connect has kind of opened up, I think either kind of Dev Connect or the permissionless one kind of we're looking at now.
It would be pretty cool if we could organize a form of like a delegate system where people who are maybe local or able to travel to these events that the team can't make could attend in a smaller informal capacity. Just an idea.
No, that's a great idea. We can't be everywhere, and so
Right.
and there are people in the community that know Rocket Pool as well, or in some cases slightly better than us. So, it's definitely no, that's definitely an option, I think.
Yeah, that I would be pretty excited for that myself personally. Um, Rocket Pool ambassadors, as ambassadors, as Sneaky says. But the second part of Evelyn's question was, are there any updates on operator fault tolerance plans? OBOL DVT news or alternatives? Question mark. And I think what Evelyn might be hinting on is some teasing I've been doing on Twitter about Joe's recent shenanigans with OBOL. So can you give us a little candor on that? Has Joe kept you up to date?
Yeah, so I think he's definitely been working in like a like in a skunk works team, I guess. Kind of putting together like an OBOL proof of concept with Rocket Pool. Now, this is not necessarily from a permissionless perspective. This is more from a group of people that kind of like want to go in together sort of perspective. So the permissionless side of things is much harder. But certainly it's a good first step into seeing how, and certainly from our own education perspective, learning how it actually would be integrated is very, very important. So so he's made quite a good progress on that. So I think they've got something running on Girly. I'm not 100% sure about that. But yeah. So no, that's really exciting, and it's good for us in terms of building up that knowledge base so that we can start figuring out how to kind of integrate those bits and pieces.
Right, that's definitely a topic of conversation going on in that future of Rocket Pool thread, along with Vouch, which is also, I believe, an avenue we could explore to minimize the effects of downtime. So moving back now to the bi-weekly, there's been a variety of video coverage as well about Rocket Pool. There has been podcasts, as well as a few different YouTube channels. There has also been a recent Twitter space with the Nouns DAO, which are one of our current listeners, Mr. Whack Whack Attack, was featured on. He was there as a form of ambassador for Rocket Pool, advocating that they invest some of their treasury into rETH. The Nouns DAO had already staked with stETH, and so the community thought it would be a good idea to suggest to them that they might want to diversify and also stake with Rocket Pool. So shout out Whack for making the case on behalf of the community. And if you are curious, I believe there is a recording of the Twitter space available. In a similar vein, shout out to Uisk for his work on a proposal towards Nexus Mutual. He is advocating that Nexus Mutual invest part of their treasury towards Rocket Pool. Nexus Mutual is in a very, very weird position where their treasury is already substantially in stETH, and they provide cover for stETH, as well as other liquid staking tokens. So they're very limited, in fact, in where they can invest. So Rocket Pool may be a particularly good solution for them. Lastly, there is also a proposal being worked on by... No, I believe it's just those two. Yeah.
Yeah, and actually, because we spoke to Nexus quite a while ago, and one of the biggest problems was they needed to have like the Chainlink Oracle in place. I can't remember exactly exactly why, but it was they needed the Chainlink Oracle in place. So now obviously that's in place, and now we have the capacity to kind of take those. I think it's a perfect alignment now.
Right. Big shout out to Ishka for his work there. One of the coolest things was the fact that they could enter with zero slippage thanks to this expanded queue. Previously, when we sort of approached DAOs to consider moving with Rocket Pool, the limited deposit pool size was a consistent concern. So definitely more appealing for DAOs moving forward. Rocket Pool recently hosted all nodes and blocks route for a panel discussion. Do you want to give us any insights about that discussion?
Yeah, so this is the second time we've done this panel. The previous one was pre-Chapella, and we're looking to make it a bit of a regular thing. There was a pretty good turnout, great group of people there with kind of different perspectives from different parts of the staking world. But it has been all go with the various interviews and Twitter spaces and everything. I think there was a period there where we were having pretty much one every single day. So yeah, keep an eye out for that panel with all nodes and blocks, right? Could be back for, say, a monthly series, taking suggestions for names if anyone has any ideas. I was particularly proud of my ETH staking hits escape velocity one for the previous
It's quite good.
References to obviously not only Rocketry, but the potential, albeit not really realized, of ETH finally escaping from being staked.
Yeah, you are not exaggerating when you talk about this deluge of interview material that has come out recently. And yeah, big fan of that title. So Langers, you've been quite busy. You've recently been interviewed by OpenOcean, as well as participated in panels by Reserve Protocol and EtherFi. I think EtherFi is really interesting in that list of protocols, in that they are an up-and-coming LSD protocol that is trying to do something a little bit unique, in that liquid staking token holders will keep the rights to initiate withdrawals. Now, this doesn't necessarily make it a more decentralized tool. It does, however, provide some variety and diversification in the industry, which in and of itself is important. It doesn't necessarily have to be more decentralized, as long as it is somewhat decentralized and is an alternative. We need a good number of these protocols if we want to keep the beacon chain healthy going forward. So Darren, any takeaways from these recent interviews you've partaken with about the ecosystem?
Yeah, it's been very good. We also had one with all nodes. Now I'm going to get it mixed up. Blocks route, I think, and what else? Yeah, somewhere else. So that was really good. I mean, all of these interviews are fantastic. It's really good to hear kind of different perspectives. Obviously, I'm on a lot of panels with lots of different protocols, and it's interesting to see the angles they come at different things. But also, so with the one with all nodes and blocks route, it's that was really interesting to hear from a kind of a relay perspective as well. Particularly on like the whole Prism and Flashbots and thing. That was kind of a really interesting story, and to hear what was going on in the background for that. So I love doing panels. I think I pretty much walk away learning something myself as well. So I really love it, and the invites are not slowing down. I do quite a lot of them, and I've got like a bit of a backlog coming up as well. So it's really good. And obviously the more that we can get kind of Rocket Pool's name out there, and I don't think it's definitely a testament to where we are, in the sense that pretty much every panel asked for us to be on, almost, not always, but pretty much, because we are quite a major player now. I think I think Beacon Chain finally updated. I've been giving Butter some stick about the staking pools page on Beacon Chain has finally shifted us to number 5 in the
Nice.
the top in the top depositing depositors. So that's fantastic. That's good to see. But yeah, we are at that level now. So we are kind of giving in terms of that, or making a name, not making a name, but certainly there's a presence that we have to kind of maintain.
Well, a milestone I don't think we mentioned earlier is that Rocket Pool passed 500,000 ETH deposited onto the Beacon Chain, which is incredible.
Yeah, that's amazing. And we'll continue to kind of make everyone know that that's the that we're kind of hitting those milestones. It's very important.
There has also been, beyond interviews, a variety of community calls recently that you should definitely check out. They included Lodestar, who is doing their own incentivization program for solo stakers, TimeSwap, the DEX I mentioned earlier that has onboarded rETH, Sommelier Finance last fortnight, who was on our biweekly update, who run a sophisticated Cosmos-based a vault based purely on liquid staking tokens. And then the special Atlas AMA Part 2, which was largely just to get node operators ready for that. Moving on from that content, RPL has continued its normal trajectory of continuing to be onboarded onto centralized exchanges, including BitThumb, which is a special one. BitThumb, I believe, is one of the largest in South Korea. It was cool. They announced the RPL listing very shortly after Atlas went live. So it may have been the case that they were waiting on that, or lucky coincidence. But either way, great to see RPL now in a huge foreign market. There are also a few smaller exchanges, FentiSwap and CoinCradle. Make sure you do your research on those smaller exchanges.
I think I mentioned it. It was one of our impromptu voice chats, maybe when something was going live. There are a few notable things recently, but anyway, I've been talking to a rep from BitThumb for a little while, weeks if not months. They had a few questions and I was helping them out with some info and where to find bits and pieces. So I'm not sure if it was a coincidence or whether they timed it. I certainly had no clue as to when or even if it was going to happen. But yeah, always great to see.
A fun bit of news is WAC and Ken and I put together a bullcast on the eve of Atlas. It was a really fun get together, and we had a great conversation about our shared history watching the protocol go from launch to this point, our own individual unique perspectives on the protocol's growth, its trajectory, and where we see it going from here. I believe it was one of the most informative conversations I've had the honor of being part of. I highly recommend you all check it out. Now that some of the things we predicted happening have started to play out, we are seeing the SEX flow, the centralized exchange flow, come now into decentralized alternatives that we were hoping would happen. Great stuff. RPL also had some nice coverage when it hit the top 50 earlier on CoinGecko, and has consistently been rated a top 5 volume on Uniswap. It's cool that RPL still has a large amount of volume on chain relative to this centralized exchange volume. Not very many tokens in the top 100 have that claim to fame. There's also been integrations with staking rewards and open oceans for rETH and Rocket Pool generally.
Staking rewards in particular, we're working with them. Another case where they've got a few questions about Rocket Pool, and they have some kind of verification system where I guess we get the equivalent of a blue tick. We're going to make some more progress on that today. So yeah, they're certainly taking notice of Rocket Pool, and we're working on them with that.
We've also been working with Token Terminal to kind of put as many kind of stats and that sort of thing into their platform, so that you can see things like mintings and TVL and loads of other bits and pieces in their platform as well.
Some spontaneous spread for listeners. NounsDAO, a representative of NounsDAO, just came into trading to announce that they're proposing a test swap of their new automated market making, time-weighted automated market maker, to swap 400 Raps ETH for rETH. So that's a nice little bit of information there on our topic we were talking about.
Nice.
Yeah. Our last thing to cover is just that there has been an endless amount of different media pieces and Twitter threads that have been talking about Rocket Pool. There's just a paragraph wall of links at the bottom of the bi-weekly that have list out just a portion of these. So if you're interested, there is a ton of content out there being produced about the Rocket Pool ecosystem, as all things are firing ahead.
Yeah, buried in the middle there's one from Forbes, a bit of a passing mention in one of their articles, I believe, just about ETH and or staking in general. But yeah, Rocket Pool certainly becoming like a de facto name alongside Lido when it comes to examples or commentary on the industry. And not sure if we mention it yet, but there's just a follow-up comment about NounsDAO. Assuming success, we will put up a proposal to swap another 5,000.
That's awesome. Alrighty, that just about wraps up today's call. At the start of this call, we were joined by Adam Blumberg, a certified financial advisor who has his own certification company. And we did a little discussion about how we can help the world transition into the decentralized crypto world through educating these financial advisors. We also talked about how once you are sort of at the node operator stage, or once you have a decent portfolio, you really have to start thinking about things in these podgy, as one might say, older, planned out ways to make sure you don't lose your wealth over time. We also invited him back to a chit chat on Friday, so if you have questions for him, that would be a good time. We then jumped on over into the bi-weekly. This is the first bi-weekly, excuse me, since the Atlas upgrade. So we dove into the really just astounding stats that have appeared. Notably, 26% increase in mini pool count in just one fortnight, 2-week period. So the numbers were mind-boggling and bode well for the future. We commented on the recent smart node updates for 1.9.2 and 1.9.3, which included a hot fix for a minor bug related to the fee distributor. In terms of research and development, we discussed how Atlas had a very successful launch, and that the ZK Sync era price feed is now live and operational. In the world of integration, there was a ton to discuss. Proposal for Sturdy Finance onboarding. Alchemist increased their rETH vault cap. DAppNode announced that they are successfully testing rETH mini pools on testnet. Arbitrum V3 has a proposal to list rETH. Arbitrum Aave V3. Further, PancakeSwap incentivized RPL ETH and rETH, as well as TimeSwap and other DEX with fancy interest rate mechanics and Maverick protocol on zk-sync EVM era. Sommelier Finance continues to use rETH in their vault. Further, a proposal was raised and is now on Snapshot, which is soon to close, to support rETH on Hop, a fast bridge to make rETH, I believe, the only liquid staking token on a fast bridge between layer 2s. OKX integrated our Rocket Pool liquid staking into their DeFi wallet, which is a critical integration. Further, Flashstake announced progress on their interesting blend of fixed yield and hyper staking. Governance continues to bubble on with topics related to ODAO health and voting edge cases. The IMC wants your feedback on a modification to the charter to include Oracle safety and RPL liquidity. There is active brainstorming going on in the Discord and on the forum about what the protocol should do next after Atlas, whether it be DVT, the bond changes, or more. Now is the time to make your voice heard about the future of the protocol. In media and marketing, coverage has been incredibly high. Shout out to the ETH Staker community for their coverage and live stream featuring POAP. There has been a ton of podcast, interview, and Twitter coverage, including Now DAO for Whack Whack Attack, a variety of interviews of Langers, including Open Ocean, Reserve, and EtherFi. If you are interested in this content, you can find it all in the bi-weekly. RPL has also been listed on a variety of new centralized exchanges. Make sure you do your own research. The Atlas Bullcast released by Whack Whack Attack and covers some insight from a variety of community members, myself included. Some different data aggregate sources, such as staking awards and Open Ocean, have included Rocket Pool into their dashboard view. Lastly, the amount of content available about Rocket Pool is exploding, including Forbes, Investopedia, Crypto News, etc. You can find all of this on the bi-weekly and more. That's our call. Thank you all for joining us, and I will see you next time.
Thanks, Jasper and Langers and Adam and everyone in the audience. It's been a big week, big couple of weeks. We'll see you Friday, chit chat.
Thank you, everybody. Speak to you soon.
Cheers.